Okay, today is February the 23rd, Sunday evening, just after the weekly close. Let's do the market outlook and plans for the week ahead. So let's start off with the news events. Luckily, just like last week, it's going to be more or less a non-event. On Tuesday, we have the consumer confidence, and on Thursday, we have US GDP. Apart from that, it's going to be a non-event week, so we don't really need to worry too much about what the boomers are doing here. So let's go ahead and get into the boom markets. So let's go over the S&P. So nothing's really changed with the S&P from the last rundown. Let's just lightly touch on everything so that we're all on the same page here. But essentially, we're keeping an eye on this structural shift as we've transitioned into 2023. We have started the consecutive higher lows, and we've been fighting for higher highs. So we're keeping an eye on the structure. Zooming in a little bit more, we are looking at this range that we're working with right now, trying to determine which way we're going to break from it. It's a nice tight composite. It kind of lines up with the last range distribution that we had back in February. So I ultimately think it's basically going to play out the same way. We have a range. We should break down from this range, find support at the yearly. We have a ridiculous amount of overlaps, right? We have the HVN. We have this range low, this range high, excuse me. We have this range low. We have last year's bands and we have current year's bands, which all roughly overlap with the yearly VWAP, if, assuming the dip is a little bit extreme. So ultimately, looking for the S&P to pull back towards the mid 39s, maybe into, if it's shallow, maybe it's, up into the 4Ks. If it's really steep, maybe into the lower 39s. The invalidation on this thesis is going to be the 39 region. So if we lose 39, we're looking at a range break from the macro range. So I didn't touch on the macro range. Let's do that really quickly. We have a range that is quite a large range now. We're coming up on a year soon here. So we're trying to decide which way we're going to break from this range. I should probably draw it a little bit better, more like that. So once we get a break from this range, we should see momentum continuation. If we get the upside, we're looking at targets towards 44, 45. If we get the downside, we're looking at targets towards 36, mid 35s. I don't think it makes too much sense to worry about these two higher time frame setups. Worry about the lower time frame range and worry about the immediate, bullish structuring. And then the directional break from this larger range should be an afterthought, in my opinion. So TLDR of everything on the S&P is I think that we're going to ultimately break from this range to the downside, find support around here for our next higher low to push up for our next higher high, which will probably exhaust somewhere around 42, 43. Where it would probably want to pull back and do its next drive up. So that's pretty much it for the S&P. Going to skip over the NASDAQ today because it's essentially the same exact thesis. The NASDAQ structure is slightly more bullish. So if you do have a bullish setup, it does make sense to probably punt it on the NAS instead of the S&P. But ultimately, they have the same exact structure, structural shift coming into 2023, looking a little bit bullish for continuation. So we'll digress from that. Let's get over into the corn. Okay, so first things first, let's cover higher time frame stuff on the corn here. So I wanted to draw it in a simplified way for everybody. So this is what we're looking at here right now, basically. We're kind of in a diddle in the middle zone. So as far as higher time frame, I wouldn't want to put any risk on. Essentially, I either want to see us trade up. We're into the 29 region, so trade up about 1,500 points. From there, I'm going to look for either a short setup or a reclaim setup. So we'll go over those levels on a more zoomed in approach here momentarily, but basically 29K has a shitload of overlaps. So we're either going to be looking for the reclaim or the rejection up there. Apart from that, if we don't get the move up towards the 29s, then we're looking at my major bid zone. So this is a bid zone that we've been looking at for quite some time. This 26 to 25K region. So from a higher time frame standpoint, it's a low volume node. It is it's last year's VWAP, and it's going to conveniently be this year's VWAP by the time we get down there as well. So there's quite a few overlaps. There even does happen to be some composites that we can go over momentarily as well. So in short, the main play is actually this long. So I know that everybody, I talked about this on the stream on Friday. Everybody's pretty bearish right now. I'm willing to basically be the person that punts the trend continuation and end up being wrong. I'm willing to risk being wrong on this. I just don't have the signs that the trend is over for me personally. So I'd rather be late to the trend reversal rather than try to jump on it anytime soon here. Because I think that either we'll trade up again if it's over, or we'll just keep going down and it is what it is. So that's pretty much it for the higher time frame. Let's zoom in a little bit so that you guys can see why I'm looking at those levels. So basically, from the short perspective, right, we have this major composite, which is going to overlap with the quarterly VWAP. So this 29K region is a super important area. If we're able to get back into this comp, where, you know, that's almost certainly going to be trend continuation to trade back up, us getting through this. So that's going to be, you know, a pretty clear setup for me this week. There is potentially, you know, more aggressive bull setups where you could get in lower, but the main setup is definitely this one right here. But ultimately, I do think that we continue to trade down, just like I said in the stream on Friday. You know, trading down is invalidated by us reclaiming 29K. So pretty straightforward plan, and I know when I'm wrong. So if this long kind of plays, you know, fails, then we're obviously going to trade back down towards 20K, because 20K is, you know, 20K and 30K are the most important larger, you know, higher time frame levels right now. So if 25K bid zone doesn't hold up, then we're going to be trading down towards 20. I don't know if I necessarily want to aggressively bid this, even though this is the most important support we have, just because it would represent a structural change. But it does present a good trade thesis. So basically, if we accept below this region, that we should trade back down. So it's just for trade thesis purpose, you know, if this long gets invalidated, then we're targeting all the way down towards 20 or 19K roughly. So that's pretty much it for our time frame on the corn. For more information, check out the Paragon group with the link below, where I cover everything from how I trade to how you can develop your own style. So that's pretty much that for the benchmark stuff. Let's lightly touch on some altcoins here. So the first one I wanted to touch on was Zilliqa. Zilliqa has some sort of stupid narrative change. I don't remember. I think they're like changing, you know, they're hard forking or something. I don't care. Whatever. It has a narrative, and I kind of like the chart right now. So it's looking a little bit weak going into the fresh week, just because the corn's selling off right now. But higher time frame structuring on Zilliqa is pretty good. So basically, you know, if I got some lower time frame VWAPs that were looking bullish, then I would be wanting to bid this one. So I think that this is a pretty reasonable bid going into the week, assuming the setup ends up looking good still. So next thing is going to be INJ. So INJ, another one that I definitely don't want to be aggressively bidding or anything. Like we had talked about, I think Charlie actually nailed the top. I was definitely quick to shift my bias and not long it anymore, but I definitely didn't short it. But it is what it is. You don't need to necessarily play all the up and down moves. Kudos to Charlie and some of the other boys for nailing this one. The final one is going to be Arbitrum. So Arbitrum got absolutely smacked down, but it is coming into, you know, kind of the parabola setup. So this was the extension of that play, right? The initial, you know, phase one all the way up to the meme level played out perfectly. So if this thing is going to have any life in it, it's probably going to start to catch a bid here in the 130 region. Maybe it trades down a little bit lower, but essentially I could see something like this playing out where it goes for its next high. But again, I don't really want to knife catch anything. That's pretty much it for the week. Stay safe out there, guys. Definitely recommend paying close attention to VWAP structuring at the beginning of the week here on the corn, because that's going to be very indicative of what happens, right? If we continue to be bloody throughout the first day or so, then you should expect that the rest of the week. All right, cheers everybody, and good luck.